morning, my friend.
Thursday.
Snowing outside?
It is snowing outside.
Yes, it was miserable driving down this morning.
Yeah.
How was the walk? Did you walk?
Yeah, I thought about not walking, and then I just did it, and now my feet will be wet for the rest of the day.
We got 11 sets of shoes here. Can't you transfer?
Yeah, it's the socks that are a problem.
Oh, that
but
is
I guess
a
I could go sockless. But either way, yeah, this is the shakeout, so to speak, of winter.
This is classic
last
March.
snow.
They tease you with 70 degrees, and you're like, oh, everything's good. Maybe I should put out my patio furniture, and then it snows.
Not so much fun.
And it was bad. This is like a nasty snowstorm. It's wet. It's heavy.
It's a classic rain and then snow, but it's not cold enough for the snow to be like, yeah, it's not like frozen, which is nice. There's no ice, but it's just like slosh everywhere.
I came down
fun.
early this morning, and I mean, short of them working on the expressway, the traffic was horrible.
I'm sure. Yeah, I'm sure the traffic is not so much fun. But you know what? It's Thursday. We had a ton of stuff come out this week, a ton of news. Markets are moving. I'm decently happy. I could work myself up to being happy.
Could you?
Yeah,
Look at you go.
I think so.
I like to see that.
I mean, why not? What's the alternative?
I think that sounds fantastic, and I do know after yesterday's show, coffee's an off-limits subject now for you and I.
Coffee. Oh yeah. We're not. I don't want to talk about it.
No, it's all good. I love the coffee at home.
Yeah, it's a really good situation that Pete has. Some would say perfect.
Someone would say perfect.
But yeah, let's tap into this U.S. dollar.
We got so much going on. BOE announcement coming up in 25 minutes. Swiss National Bank cut rates this morning.
25 bips.
Right.
Would if I asked you yesterday what the Swiss National Bank interest rate was going to be today, what would you have said? What would you have guessed interest rates were in Switzerland? I mean, you're pretty tapped in, but would you have guessed that they would have been this low? If someone would have asked me yesterday, hey, the Swiss National Bank is having a meeting coming up, what do you think their interest rate is going to be after the meeting? I would have said, like, I don't know, $1.25, like 1.5%.
Do you remember
they're at zero
when they were low? They were at negative 275.
Oh man,
yeah.
I forgot about that.
Yeah,
we need more data in this chart. Can we get more data now?
You think about that. They were basically just taxing the heck out of anybody who wanted to hold Swiss francs in an attempt to control the currency's appreciation.
Let's see what I can get. I like the trading economics. They have the good data. Yeah, I mean, only got up to 175 at the peak of everybody hiking interest rates, but you go back in time, negative 75 bips for a while, and I can't get back further than that to get back to the financial crisis and everything else. But yeah, I hear you, but I mean, 25 bips for a major currency, that's pretty low.
It's pretty aggressive bringing them back to the zero bound again. I think they're happier with a lower exchange rate given all the uncertainties of what's going on. And I think there's this feeling too that, well, nobody's talked about imports and exports from Switzerland. When does our name come up in the random conversation?
Sure. Yeah.
So,
what item finally piques the interest of these trade war talks that we are heavily involved in?
Right.
But yeah, I mean, you lay that against the upcoming Bank of England rate decision.
And the movement, right, we're down from 5.25 to 4.5.
Yeah.
It's readily apparent what we're seeing. And the rhetoric around the S&P, again, the currency moved, Swiss moved a little bit lower on it, dollar moved up a little bit higher. The rhetoric was, we're not necessarily stopping here if the market dictates more easing. So with that, here
you have the rally in dollar. It's been beat up. I'll go to the daily chart to show you the context because the dollar has been beat up here as it has been among most major pairs.
Right, which
But
means strong Swiss, which is something,
Yeah.
again, the Swiss are very mindful. Now, the euro's rallied against it. Again, we had the Swiss peg to the euro for the longest period of time before that peg broke. It's actually a good question. Can you go back to euro Swiss?
Sure. Oh, Euro Swiss, where are you? There we
There you
are.
go. Okay, so,
So you see the recent euro rally,
right.
but a general trend lower euro against this Swiss franc over
Right.
the last year or so.
So, and I think the Swiss continue to be sensitive about an appreciating currency for them. And so they opened the door that, we're not necessarily, I forget what the exact word was, but it's not that we're not necessarily done, but could go either way.
Gotcha.
We're not bound, and they demonstrate they're not bound by zero, and they kind of reinforce that. So you saw a little bit more juice go into that Swiss.
A cut and a dovish cut at that, because
Right.
they were expected to cut, but to see this rally out of the dollar, which isn't anything crazy, it's what, 30, 40, 50 points maybe at its peak here, and this is a dollar again that's been beat up
Right.
throughout the first couple months of this year. But yeah, the expected cut to 25 bips is one thing, but the dovish rhetoric around a central bank that is very liberally moving interest rates lower to maybe defend against its currency getting too expensive in certain pairs. Interesting piece there. Looking ahead to this Bank of England meeting, you have a little bit of dollar strength in some of the pairs. Interestingly enough,
Yes.
dollars is continuing to lose ground against
Yeah.
this yen. So before getting to euro and sterling, which are maybe standing by going into this Bank of England meeting, man, this was an interesting trade up to this 150 is just so. You and I rarely harp on like, oh, this is
Big
a
round
level.
numbers.
Yeah,
Yeah.
it's important. Remember S&P's
Right.
at 3,000. Like this is a big deal.
I remember the first time they crossed 1,000. That was the impenetrable level.
I'm sure. This is a little different. Obviously, equity indexes, that number is relatively arbitrary.
Right.
It's an amalgam of a bunch of stock prices that maybe they have some unique levels, but even then. Whereas here, it's a little bit more direct. I mean, this is obviously the exchange rate between dollars and yen. And we'll go back in time in just a second and put more data in here. But we get up to this 150 several times this trading week, Pete, and they sell it off every time. And then yesterday, coming out of the meeting, they hammered this dollar all the way down below 149. And this morning, dollar bouncing against euro and a couple other pieces, not this piece.
No, a really weak up movement that aligned with the Swiss bank announcement, but selling immediately emerged
Right in
out
here,
of it.
yeah.
And now we're seeing, again, a euro getting challenged to the downside, Aussie, Kiwi, yen is absolutely, and you've shown this through yen is, and Glenn had a great piece on yen correlations. Yen is again demonstrating it is being driven by its
Interesting.
own things.
You think this might be a little bit of a... So yesterday you had the dollar weakness, which was one thing, which is, this move coming out of the Fed event. Is this morning's continued weakness in this pair for U.S. dollar a little bit of a flight to quality extension? Because you have equities moving lower this morning. You have
could.
The last piece to look at here
But
is
what's
that commodity
interesting-
currencies are, funny enough,
Getting hammered.
Getting hammered.
Yes.
And U.S. dollar seeing, a percentage and a quarter of strength against this New Zealand dollar in the same time that it's off, almost a full percent from yesterday against the yen.
And I think when you look at, where the bias is, dollar yen was sold as all the other currencies, as euro rallied, yen rallied as euro rallied, while U.S. equities rallied yesterday post FOMC. Since then, this morning, euro's given back a big chunk of it. Swiss did after the rate announcement. Yen is again,
Here's that euro rally yesterday afternoon,
Yeah.
and then it gave all of it back.
Do you remember last Fed meeting we did the same thing where we had buying of currency, selling of dollars, and around 3 o'clock in the morning, the following day, equities had rallied. They came in and they started selling equities. They started selling currencies, buying the dollar, and it was a pretty, basically taking out everything they had put in post-Fed announcement that day, taking it back out. And it seems like they're doing that in very short order here. But the yen continues to exhibit a very distinct behavior. And is it, in this instance today, we're seeing U.S. equities or bonds are rallying. I think bonds are, we're back through 118 and the long bond.
Really? Okay.
2 years well below 4%. Is that helping the yen cause? Yeah, I think so a little bit. That rate divergence, I mean, where, again, lower U.S. rates are not helping a euro at 109.5 or Kiwi that had gotten up into the...
Well, it's always funny because you tend to think about things in our, egotistical, narcissistic U.S. mind. It's always a U.S. It's easiest if it's a U.S. dollar story. I guess I'll go that route.
Yeah,
and so it's always easy to be like, oh, especially the Fed events yesterday, and you would expect, okay, after the Fed event, this is what happened with dollar, and now this morning, this is what happened with dollar.
Right.
And to your point, maybe there's a dollar move to the downside after the event or the upside after the event, and then the next day maybe it reverses or maybe it continues, whatever. It is super interesting that this is one of those moves. If you tell me, bonds are up, U.S. rates are down, but U.S. dollar is gaining against euro and U.S. dollar is losing a bunch of ground against yen, then
so how much higher is dollar yen?
Is this an environment where boons and European debt markets are actually moving even higher and their interest rates are moving even lower, but the Japan story is just so different that it's bucking this trend? And if anything, maybe we're moving into an environment where a lot of these stories are yen stories.
Yes.
And you're seeing that, okay, the U.S. is trending like a lot of these different areas lower in interest rates, like the euro area, like the UK and everywhere else. And so maybe they're kind of like, euro gets up to 109 against the dollar and then it comes back down to 108 and whatever. But this yen is just building in ground against a bunch of currencies. It'll be interesting to see because we've been talking about, it's almost been like the elephant in the room. We've just been alluding to it like, oh yeah, Japan's over there. They're the only central bank that's hiking as everyone else is cutting. When all is said and done at the end of 2025 here, will we look back and say every major economy moved lower in its growth metrics for 2025 and moved lower in interest rates, maybe to
except
3% or whatever,
Japan.
Except for Japan? It'll be really interesting because, you look back at the last 5 years and everybody's been moving higher except for Japan. And so it's just an interesting piece that you look at this board and you see, a classic dollar is up just a little bit against sterling, dollar's up a little bit more against euro, dollar's up significantly against these commodity currencies, Aussie and Kiwi, and yen is beating all of them. Yeah. It's kind of crazy.
Yeah, it is. And absolutely, for the euro, they had passed that huge spending bill, but now the talk this morning was that they may not spend it all as fast as they thought. So they may not borrow as much, need to borrow as much as quickly as thought. That there's some negotiation. So as you were spot on, boons and baubles, German rates, yield the instruments rallied, yields fell.
Yeah.
Now that puts a little bit of a headwind. Would that impacted the euro at 106? Probably not. We're at 109.5, 109. We're at the upper end of the range. It's going to have a little bit more playback through the loop here.
For sure.
So, but what this is giving you, again, this was a hard rally to sell because anything between 108 and 109 looked, 108.5, 109 looked rich. Of course, as currencies always do, they go a little bit further and farther than you think.
Of course.
We got close to 110. We didn't get through it. We tried it again yesterday, right on the close in the U.S. 109.
Yeah, got
109.20, 25.
I guess this is maybe a little bit of last night, but yesterday multiple times trying to get up to 109.15, 109.20, and then releasing.
Right, and Now, here's the situation. If you think that the move from 105 to 109 was far too fast, and you had been short, you would have taken some pain. But if you had actually, even if you'd sold a little early, 108.80, 108.90, and you had put a reasonable metric around what you're looking to make and lose, and we went through those numbers yesterday, and that was a really good exercise.
55, 60 points.
55, 60 points. You would have been close on the upside.
If this right here is 109, you would have gotten 40, 50 points. It would
have been tight.
And I mean, it did this for about a week or so of trade. Depending on when you would have traded this, there was some back and forth noise.
Right, but you did get the release now.
Yeah.
And if you still think there is a fundamental shift in interest, you're getting an 80-point pullback this morning to get some longs out.
To get in thinking that we're going to 110. Well, I want to continue the dollar-yen piece and get into our segment for today, because it'll speak a little bit to a couple of these things. The dollar's failure to bounce following an unchanged rate decision from the Fed. Pete, the context is always different with this stuff. In today's environment, an unch from the Fed is relatively hawkish, because as an action, that is, everybody except for the Bank of Japan is moving interest rates lower.
Right.
We talked about how Switzerland has moved interest rates now to 25 basis points. Even the Bank of England, who's been right there with the U.S. as one of the most hawkish major central banks, moving interest rates lower in the last several months. But we dive into some of the numbers. You and I don't always do stuff like this, but I thought it was particularly interesting just to give people exactly the outlook from this March Fed meeting. Expectations, Pete, are still 225 bip rate cuts at some point here this year. And you can see in the dot plot, if you're looking at the leftmost grouping of dots, if you can follow my mouse here, this is all these blue dots are a vote from the different Fed members. And you can see the majority of this distribution is sitting right in here in the 3.75 to 4% range.
It's more like a Rorschach test. You've got like the tall snowman, a little chubbier snowman,
This
and
looks
to the
like
right,
a little kind of alien guy.
That's like either the anorexic snowman or the alien guy.
It's funny you say snowman. To me, it was they all look like Star Wars, like droids or something. Like they could all be like rolling around or hovering around and like doing some Star Wars stuff. But snowmen, Star Wars characters, whatever have you, in 2025 focused around. This is actually four members thinking that we'll end the year exactly where we are right now, which is 425 to 450. But the majority of Fed members thinking 1 to 2 cuts, a couple people thinking 325 bip cuts, and then on into the future, thinking around 3%. What was particularly interesting, and I think what people digested yesterday more so, which has translated in a little bit of a continuation of some fear for U.S. equities and U.S. dollar against the yen, which we'll look at in a second, is the fact that if you look at these graphs here, the dotted line shows you where GDP expectations were last meeting in December, and now in March, all of the expectations from the Fed members are considerably lower than where they were. Here is unemployment, which is not considerably higher, but is inching higher from the Fed members. And so you have a weird standoff, and I think this is what people are trying to digest, which is inflation metrics they think are still kind of sticky, but they are inching growth lower and inching unemployment higher, which is a little bit of the anti-soft landing kind of case, which is, okay, growth sustains, unemployment sustains at its current good level, and inflation continues to move lower, and we kind of cut interest rates in a perfect environment. Not exactly what they're getting, and you saw it play out a little bit in this U.S. dollar rally into the event, Pete, all the way up to 150, and then they sold it off and they continued the selling today.
Yeah, and again, we were both, 150 was getting back to a rich level. We had when euro shook out to its highs, I think we got down to 144. So we had a pretty sizable rally in dollar yen. And
leading into the event here, to get back from about 145 all the way back up to 150.
Right. And, this is interesting tape action to me in terms of the dollar yen was sold irrespective of general dollar moves, irrespective of general U.S. equity moves. But the recurring theme that as bonds creep higher, remember, we started the week at 116 and change. We're above 118
2 points
now.
higher,
So yields lower. I think that yield lever, if we continue to see bonds creep 118, 119, 120, this is going to potentially have kind of a very interesting exercise right back down to the
and you raise a
lower half
really
of 145.
interesting point, which is that equities moved higher on the event.
Right.
The Fed comes out, they don't change, Powell speaks, and equities are moving towards their highs for the week.
Right.
And the dollar is getting annihilated. And you might say, oh, okay, well, the yen flight to quality trade, actually, that makes no sense here. I don't know what the move is there. It's just dollar weakness. But then today, as they digest it more in the aftermath, equities are giving back those gains. And now you might say now you're seeing the yen flight to. It's regardless of what's going on in the other asset classes that you're seeing the dollar selling.
And we talk about flight to quality and everything people can say, well, you're just, again, markets moved, you're picking off your sticky board of causes.
You can always tell the story afterwards.
Right.
Yeah.
And it's not that. It is, all these things come into play in different ways. The interest rate differential is real, and it drives prices.
It's probably more real than anything,
Yes. Expectations around growth drive prices. But it is the validation of the market being the sum of all those things. And rather than trying to guess at them, it is looking at context of what is the takeaway for me as a trader? Am I supposed to guess what the next change in rates is? Not necessarily so, but to see that where's the linkage? The linkage right now is long and short end. U.S. yields are helping to fuel dollar yen moves. So this is on my radar. If we trade north of 119, I've got to imagine that dollar yen selling continues at an accelerated rate as we go into the weekend.
And this is where we'll leave it here, because the U.S. rate expectations for 26 are currently still kind of mirroring that dot plot. And remember, this is what the traders think out in the world of interest rate markets versus that dot plot, which is just the Fed members, what they think.
Were you surprised this didn't move one way or another?
I was surprised to see, given the dollar weakness, that these rate expectations are still in that 3.5% to 4% range, which is where the Fed is. But I think leaving people here with the current picture, and also keeping in mind the carry trade when you're talking about dollar yen and a couple of these different things, here is the current landscape, which is UK's at 4.5%, the US is still at 4.25% to 4.5%, Aussie is still decently high, Canada relatively high, but all these markets moving lower, and Japan is down there at 50 bips, but they're the only ones that are moving higher. I think that you have to probably watch the interest rate price action, where the carry trade dynamics kind of kick in for a number of these pairs.
This is a great way to end it too, because we know there's a strong chance they're going to cut rates in about 4 minutes in the UK. Aussie has made clearly that they're not stop. This is not necessarily a stop to the downside.
It can't
Same
be,
thing with Canada.
Yeah.
Same thing with Europe in terms of growth. The only thing that we know for certain is that Japan has no interest in cutting, and the discussion is when the next hike is. So that is, when we look at this disconnect around performance, this is a great summary of direction, drift of travel, and potentially what moves, and why the currency outcomes we're seeing.
Awesome. Well, that'll do it for today's episode. You got Tom, Tony, and Vanetta coming up next. Thanks for watching. Peace.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform